Hey YouTube, this is Zach with Achilles Financial, and today we're going to be talking about Supermicro, which trades under the ticker symbol SMCI, simply because of the relationship that they have with Nvidia. A week ago, I guess, they were trading at around a third of what this market capitalization is, nearly $50 billion right now. And what I'm looking at is what about this company has caused them to explode higher. And really, the only thing that I keep coming up with is, again, they are involved in servers. I imagine that they are going to continue to be a beneficiary of the AI push and the internet boom. However, I continue to see that this is a semiconductor bubble that's getting built out, because on a year-to-date basis, if I click through here, you've got a company that's up 253%. And this is not a small company. This is by no means has never been heard of. They were a $5 billion company not that long ago, and now they're a $50 billion company on revenues of $7 billion a year at the last fiscal year. So just because of that investment, they've continued to gain in popularity. You can see that they have just exploded higher in terms of share growth on a year-to-date basis of 253%. Now, if we come down lower, you can see already that you've started to have some of their executives have actually started cashing in on their options and selling. Despite that, as I come down below, I want to point out that on a earnings perspective, they're looking at free cash flow of around $5.70 a share, which is a far cry of what you would expect from a $50 billion company. That being said, they are continuing to perform very, very well. The cash flows are strong, they're profitable, they're growing on a revenue basis. You can see all of that down below when we're looking at some of the numbers here in terms of their growth. But what I want to continue to highlight is just because a company is performing well and they are projected to perform well does not necessarily mean that the valuation is going to match up to those projections. As such, you have to be thinking of this when you're investing in these types of stocks. Is this a long-term hold or is this a short-term trade? And how do you want to approach that strategy? As I scroll up above, some of the peers that they are compared against: HP, NetApp, Seagate. These are companies, Western Digital, that we have heard of before. Again, this is not a small company. These are not small companies. But I want to highlight, when you talk about valuation, these numbers are as of 2/9, so February 9th. This is last week. And already the price to earnings and price to sales are wildly outdated. And this is a server company that is trading at north of 5 price to sales. Now, when you look at it on a profitability basis, again, you continue to see strong profit margins, but not really anything that's different from who Schwab would consider to be their peers in NetApp and HP. However, the explosive growth that we've seen from Supermicro is just an absolute insane amount of money poured into the market capitalization of the stock. As such, I anticipate you're going to continue to see a large amount of these Form 144s filed, where you are going to see executives as well as inside shareholders selling out, because when one day you wake up and if you've been invested in this company for 5 years, then all of a sudden you're going to wake up one day and say, hey, my investment is worth a lot more than it was when those shares vested, even if that was a year ago, or even if it was on December 31st, where we saw that 250% year-to-date gain. So the reason I call this out is because I think that we're at this stage of the stock market where there are going to be some runners like this. I think these are great stocks to try and trade. I think you can get in trouble if you try and invest in them for a long period of time. And surely this stock could continue to go higher. I'm sure people were saying it was overvalued at the end of January, when on a year-to-date basis, it had already gone up by $100. However, there's going to be different timing components, and you have to always know that the time you sell a stock at a profit, you are locking in a profit. Whereas anything outside of that, even if you're up, is what's called an unrealized gain. And as such, you're not recognizing those gains on the sale of those stocks. So there are tax implications, there are investment implications, but I continue to believe we're going to see a number of companies that are going to have some of these wild runs. So let me know in the comments down below if you have played SMCI or if you are intending to do so. Love to hear your feedback. Thanks. Talk to you later.